All right, so we are going to a new week. Now let's make a quick analysis on Euro USD. Like I've already done my analysis, but I just want to, explain to you guys what I'm still watching out for on Euro USD and why I've stayed out of it for a while, because I'm waiting patiently for price to come into my level. As simple as ABC. I'm not trying to rush myself. I'm not trying to, chase the market. So it is simple. What do I do? From the yearly time frame, I try to mark my draw on liquidities. And to be frank, out of every draw on liquidity that I know out there, your fair value is a draw on liquidity. Your other block is a draw on liquidity. Swing high, swing lows, previous daily high, previous daily lows, previous whatever it is. All those levels are draw on liquidity. And how do you pair draw on liquidity with buyers and trying and market structure? That is what is very, very important. Try to understand where price is going. The moment you understand where price is going and where price is coming from, every other thing will be very, very easy for you to understand. Now, my draw on liquidity is very simple. I prefer to use the obvious swing highs and obvious swing lows of the yearly time frame just to picture my yearly buyers for this particular pair. I don't try to go into the market with a fresh mindset every day, trying to look for who is buying and trying to look for who is selling. I already have a view of what I'm trying to see. Even if it's just 3 trades on Euro USD I'm going to trade for the year, I'm good. It's not a must I trade Euro USD every day. This is why I said that I really don't believe they should have been scalping or day trading in forex, because there are so many distractions out there, and it is very simple and easy if you try to erase the noise and not trying to follow the crowd, because everyone wants to be a scalper, everyone wants to be a day trader without even understanding what it takes to be all these things. I'm not saying they don't work. You understand? I'm not saying we don't have scalpers that are making it good. We don't have day traders that are making it. Obviously, they are. But I'm just saying, as a newbie, to have a good understanding of price action, honestly speaking, you need to start from the higher time frame. If you really want to have a good knowledge of price action, you need to start from the higher time frame. You understand, you have an overview of what you want to do on a particular pair. Because the moment you start guessing, the moment you start putting in your sentiments, your emotion, then there's going to be a big problem. So I don't want this video to be too long. So now, my draw on liquidity on the yearly time frame is obviously this particular external liquidity right there, this swing point that was coming from this structure. Now I have this swing low too as well as my external that was coming from this other block and this fair value, which means price is moving in this box right there within this external, this sell side external and this buy side external liquidity. So that is very simple. Now we can clearly see that okay, price was retracing down into this level, right? But when you look at this price action very well, you might get confused of what price is doing. But for more clarity, you just need to go to the line chart and see what the line chart is telling you. Now, I don't want this video to be too long because I've done all these analysis already. Now, let me just start from this level here. Now, we had this break of structure right there. So price gave us this range from this swing, from this low to this high. We had this range, which is using my GAN box to mark that range. Now, it simply means that this level right there becomes my yearly demand, right? So now, Let's go back to our candle and see how price reacted on that level. Now, this is why I love this setup, and this is why I'm very certain that price is coming to attack this external right there, and we have this other block as well as a draw on liquidity too. And if price breaks through these two, then I'm expecting price to come and take out this external. So that is it, because this is my demand. Price gave me this order block and this fair value, took out this high right there, change of character, break of structure, whatever it is you call it. Now price came back into this level, pushed up, then came down. But what did you notice? Price swept every stop loss below this candlestick right there, swept it, and then so automatically we're having a sweep in this yearly demand, and we can clearly see that price is giving a very strong bullish momentum. And how do I confirm that? Now, the reason why I confirm that, going to my monthly, now I'm done with whatever it is I'm doing on my yearly time frame, because I understand what price is doing and where price is going to. Now, on the monthly time frame, this was when price came into that demand. This was the sweep I was talking about. Price did. Now we swept that level, and going back to our line charts, you can clearly see this was the high that was responsible for this sweep, and immediately we took it out. So automatically I have a change of character right there, a break of structure, whatever it is you want to call it. Now using my gun box from this low now to this high right there, so this gives me my monthly demand. Now this trade was a very good trade, because that was the trade I've been following ever since we got to that level. Now going back to our candle, you can clearly see how price came into my level right there, swept a 2-month candle before moving. So I'm always watching out for this sweeping, because we had this fair value gap right there. So I'm always watching out for a sweep of any previous candle in my level. That is very, very important. Very, very important. Now, if you have been following me, you would notice I've not really used anything other than liquidity, range. After a price gives me my range, I use my gun box or Fibonacci, whatever, which one you want to use. Then you mark your level to determine your demand and your supply level. Now this is where it gets crazy. This is where most traders get it wrong. This is where most, because look at this level. This was a liquidity before coming down here, before we moved. So accumulation, manipulation, then distribution. So this is how all these strategies comes in, but you need to understand where you are and what you are really doing before all these things can work for you. Before all these things will work for you. Now, we've used this demand. I'm not interested in that monthly demand anymore. Now, going back to my line chart, is price giving me another structure? Okay. Now, we had this break of structure right there. So now, the next thing I'm going to do is use my gun box and mark from this low now to this high right there. So automatically I have a monthly demand right there. So I've already marked that. Now I don't care whatever price does. I don't care whatever it is price wants to do. I'm going to wait for when price comes into my monthly demand and I start trading. As long as price has not taken out this structure, this external liquidity before touching this monthly demand. This monthly demand will always be valid to attack this external demand. See, this forex is more or less like you playing a COD. You need to think outside the box. What is chasing you and what are you chasing? It is just as simple as ABC. Try to understand your draw on liquidity. Make it simple for yourself. The next thing you want to determine is, okay, is price giving you a structure? And what is that structure? The structure I use is break of structure, a valid break of structure, a valid. a structure that is giving me a range. Then I mark that range, determine the 50% of it. Either I'm looking for a supply or a demand. Now, in that monthly demand or supply or whatever demand supply you are using, now, do you know that like as a trader, this is all the region I'm looking for to buy? This is what I want you to understand. That is the whole region, because all this region now, from here to this level now, is a supply for me. So everything going on here on the lower time frame is going on in a supply of a monthly structure. This is very simple and straightforward. But everyone wants to be a scalper. It's fine. It's good. It's fine. But trust me, I don't think trading was meant to be for you to scalp or to day trade. Honestly speaking, I think it was meant for it to be like, a business whereby you need to wait. You wait for the appropriate time. You do your analysis, you do your assignment, and just wait. But everyone wants to make money. Everyone wants to drive Lamborghini and all that. So that is fine. So this is the whole region I'm looking for to buy. Now, in this region now, what do you see? Now, in this region, there is a fair value gap right there on the monthly time frame. Now, there is also another fair value gap right there inside my monthly demand. But there is another information going on inside that monthly demand. Now, and what is that information? The information is that when we had this fair value gap, this third candle here was a breakaway gap. So I don't expect price to come back deep into this region, except if there is an unforeseen circumstances. Now, look at this particular fair value gap right there. This third candle was not a breakaway gap. This is the normal fair value gap, which means I'm expecting price to come back into this region, respect this fair value, respect this monthly demand, and respect this breaker block as well, because this is also a breaker block right on that level too. So which means I'm having three confluence that whenever EURUSD comes into that region, I will be looking for buy on the daily time frame, because this is a monthly structure. So all I will be waiting for on the daily time frame is the same thing as this: a sweep of liquidity, a break of structure, then a daily demand. That is how you censor this time frame from the higher time frame to the lower time frame. Then you give yourself this peace of mind. Thank you very much.